So the following were included in the assets and liabilities of Fitpro Fitness Centre Limited on the 1st of the 1st 2016. Buildings and grounds at cost €600,000. Equipment at cost €80,000. Furniture at cost €40,000. Stock in shop €5,000. Stock of heating oil €1,800. Contract cleaning prepaid €200. Investment interest due €300. Creditors for supplies to the fitness centre €2,000. Members' fees paid in advance €3,000. The authorised capital of the company was €500,000 and the issued capital was €350,000. All fixed assets have 3 years accumulated depreciation on the 1st of the 1st 2016. The following is a receipts and payments account for the year ended 31st of the 12th 2016. So there you have the receipts and payments account. So here are the receipts and here are all the payments. So the following information and instructions are to be taken into account. Note 1. Closing stock at 31st of the 12th 2016, shop €1,800, heating oil €400. Note 2. Cleaning is done under contract payable monthly in advance and includes a payment of €600 for January 2017. Note 3. Members' fees include €4,200 for 2017. Members' fees in arrears at the 31st of the 12th 2016 were €2,700. Note 4. The closing bank figure does not take into account bank charges €110 and a dishonoured cheque €950 received from a member in respect of fees. Note 5. The payment for laundry includes €2,700 for 3 weeks' wages paid to a replacement fitness instructor. Provide for a further 2 weeks' wages due. Note 6. Wages and salaries include €24,000 per annum paid to the secretary who also runs the shop. It is estimated that 60% of this salary and €300 of the light and heat, €850 of the insurance and €400 of the telephone and broadband is attributable to the shop. Note 7. Creditors for supplies at the 31st of the 12th 2016 were €3,600. Note 8. Depreciation is to be provided as follows. Buildings and grounds 2% of cost from date of purchase. Equipment 20% of cost. Furniture held on the 31st of the 12th 2016 is depreciated at 20% of cost. No depreciation is charged on furniture in the year of disposal. Required. A. Prepare a statement of the company's reserves, profit and loss balance on the 1st of the 1st 2016 for 18 marks. B. Calculate the profit or loss from the shop for the year ended 31st of the 12th 2016. Show your workings. 10 marks. C. Prepare a profit and loss account for the year ended 31st of the 12th 2016. 32 marks. D. Prepare a balance sheet on the 31st of the 12th 2016. And E. Fitpro Fitness Centre have decided to purchase and install new gym equipment. They have received a quote of €225,000. Can Fitpro Fitness Centre afford this investment? And explain your answer. Okay, so part A. Prepare a statement of the company's reserves, profit and loss balance on the 1st of the 1st 2016. So what this is asking us to do is to create a list of all of the assets on the 1st of the 1st 2016 and then subtract from that a list of all the liabilities on the 1st of the 1st 2016. So how will we do that? We'll look through all of the question to find out all of the assets and liabilities. A lot of them are at the start, at the top of the question. So you've got buildings and grounds is an asset, equipment is an asset, furniture is an asset, stock and shop, asset, stock of heating oil, asset, contract cleaning prepaid, so an expense prepaid is an asset, investment interest due is an asset. Then the liabilities, we have creditors for supplies to the fitness centre, liability, members' fees paid in advance is also a liability, and then the issued capital is a liability. We do not enter in the authorised capital because this is what Fitpro Fitness Centre is allowed to sell up to, but this is what they actually have sold in shares, so 350,000. Now we have to remember that all fixed assets have 3 years accumulated depreciation on the 1st of the 1st, 2016. So what are our fixed assets here? They are our buildings and grounds, our equipment, and our furniture. Okay, so if we note, remember we read in note 8 there, depreciation is to be provided as follows. Buildings and grounds, 2% of cost from date of purchase. Equipment, 20% of cost. And then furniture, 20% of cost as well. So the 3 years depreciation on buildings and grounds would be 600,000 by 2% by 3 years, which is €36,000. Then the equipment, €80,000 by 20% by 3 years is €48,000. On furniture, €40,000 by 20% by 3 years is €24,000. So we can slot those 3 assets in there and then add in all of our other ones. So stock and shop, stock for heat and oil, contract cleaning prepaid, investment income due. Then in our liabilities, we have creditors for suppliers to fitness centre, €2,000, members fees paid in advance, €3,000, issued share capital, €350,000. Then what we need to do is look at the receipts and payments and the other information to see if there are any other assets or liabilities hiding around in there. So hopefully you'll notice in the receipts and payments that we have balance at bank on the 1st of the 1st, 2016, €59,500. And then we'll have investments. So we see here that we have interest on 3% investments. So we must have investments. All right. It didn't tell us at the start of the question that we had investments and how much they were, but they did tell us that we had investment interest due 300. So there was nothing then about investment interest due at the bottom of the question. So therefore, the 300 that was due at the start of the year is included in the 3,000 that we have received. So the investment income for the year is €2,700. If we divide that by 3, because they are 3% investments, and multiply them by 100, we will work out that our investments are 90,000 investments. Then we have on the payment side, we have bank loan plus 15 months interest at 4% per annum on the 1st of the 4th, 2016 for €63,000. So therefore, Fitpro Fitness Centre had a bank loan and owed interest on the 1st of the 1st, 2016 because they repaid it on the 1st of April 2016 after having it for 15 whole months. So on the 1st of the 1st, 2016, they had it for 12 months. So 63,000, all right, is the loan plus interest. So 63,000 is 100% loan plus 5% interest. Now, how did I get 5% interest when it says 4% interest here? Well, that is for 15 months. So it's 4% for 12 months. So how much is it for 15 months? Well, 4% multiplied by 15 over 12. So it's 1.25 years. So 4 multiplied by 1.25 is 5% interest. So therefore, 63,000 is 105%. The loan is 100%. That translates to €60,000, and therefore the interest for 15 months, the 5%, is €3,000. So the interest due on the 1st of the 1st, 2016 would be 12 months. So 3,000 divided by 15 months multiplied by 12 months is 2,400 interest owed on the 1st of the 1st, 2016. So liabilities, we've got our loan, 60,000, and we've got loan interest due, 2,400. So we can tot that all up, and our reserves then on the 1st of the 1st, 2016 will be €351,400. So that is part A complete. Then we do part B. So calculate the profit or loss from the shop for the year ended 31st of the 12th, 2016 for 10 marks. So what we want to do is scan down through the question and look for the word shop. So here we have opening stock of shop, the 1st of the 1st, we have shop receipts, we have purchases for the shop, we have closing stock of the shop, And then in note 6, it says wages and salaries include €24,000 per annum paid to the secretary who also runs the shop. It is estimated that 60% of this salary and €300 of the light and heat, €850 of the insurance, and €400 of the telephone and broadband is attributable to the shop. So shop receipts, 85,000. Less cost of sales, opening stock shop, 5,000. Plus purchases, 38,600, minus closing stock, 1,800, is cost of sales, €41,800. That is equal to then the gross profit, €43,200. Less expenses, we have wages and salaries, 14,400, light and heat, 300, insurance, 850, telephone and broadband, €400. So in total there, that is expenses of €15,950, leaving a profit in the shop, €27,250. So that's your 10 marks got there for your shop profit and loss. Now that profit, 27,250, should go straight into part C, where we are going to prepare a profit and loss account for the year ended 31st of the 12th 2016 for 32 marks. So in this we're just looking for every income and expense. Alright, so we're going to be scanning down from the top of the question to the bottom of the question. So first of all, we'll look at members' fees. So members' fees we have there at the start of the question, members' fees paid in advance, €3,000. So that relates to this year, so we will be adding €3,000 to that 270 there. In the additional information we have here in note 3, members' fees include 4,200 for 2017, that is next year, we will be taking that away. And then it says members' fees in arrears at the 31st of the 12th 2016 were 2,700. So that is fees due at the end of the year. So members owed us 2,700. So we are going to plus that to this year's figure. So your members' fees are going to be 3,000 plus the 270,000 from the receipts and payments minus the 4,200 fees for next year, and plus the fees due at the end of the year, 2,700. So altogether we have €271,500 there for the members' fees. Then we have the investment income. So remember that we worked out that our investments earlier on were €90,000 multiplied by 3%, which is 2,700. Now, if you remember, we received 3,000, but 300 of that was due at the start of the year. So we're not going to have any investment income due at the end of the year. Fitpro have received all of the investment income that they need. Now, shop receipts then. We worked out the profit in the shop, so you can put that in now or you can put it in straight away. It doesn't matter, just as long as you don't forget to put in the profit from the shop. Then we have sale of furniture. So we need to work out, did we make a profit or a loss on the sale of that furniture? So we need to remember that all fixed assets have 3 years accumulated depreciation on the 1st of the 1st 2016. So remember, it says then down at the bottom in note 8, furniture held on the 31st of the 12th 2016 is depreciated 20% of cost. No depreciation is charged on furniture in the year of disposal. So therefore, we're only going to be finding out how much 3 years depreciation on this was. So 20,000 by 20% by 3 years is equal to 12,000 depreciation. So the cost was 20,000 minus the accumulated depreciation was 12,000, gives us a net book value of €8,000. We compare that to the allowance that we got, €10,000, and that will give us a profit of €2,000. So happy days about the profit there. We'll put that into the income. So profit on disposal of furniture, €2,000. Okay, so then we're looking at the payment side of the receipts and payments account. So we start up at the top at wages and salaries. So that is €83,000. So there's nothing about wages and salaries at the start of the year. At the top of the question, down below we have the payment for laundry includes 2,700 for 3 weeks wages paid due or to a replacement fitness instructor. Provide for a further 2 weeks wages due. Okay, so we have to Also, remember then in note 6, wages and salaries include 24,000 per annum paid to the secretary who also runs the shop. It's estimated that 60% of their salary is attributable to the shop. So while we're doing the wages, we also need to remember that we're going to take it out of laundry again, okay? So €83,000, the wages and salaries from the receipts and payments, plus 3 weeks wages, 2,700, plus a further 2 weeks wages due that we haven't paid yet. So we'll be putting that as something owed in the balance sheet. And then we're going to minus the secretary's wages from the shop. So altogether that is €73,100. Next, we have the telephone and broadband. So nothing about telephone and broadband at the top of the question, but down below we know that some of it went to the shop. So 400 of the telephone and broadband went to the shop. So telephone 1,700 minus 400, 1,300. Back to the receipts and payments then, the next item is insurance. So 7,200 from the insurance. So nothing at the top of the question. At the bottom of the question, we have in note 6 that €850 of the insurance is attributable to the shop. So 7,200 minus 850, €6,350. Next, we have purchases supplies for fitness centre, €43,200 there. So we have at the start of the year creditors for supplies to the fitness centre, €2,000. So that means at the start of the year, Fitpro owed people for supplies to the fitness centre that were bought last year. So we will not put this into this year's accounts. So that will be minus €2,000 from our figure for the year. And then in note 7, at the end of the year, we had creditors for supplies at the 31st of the 12th, 2016, €3,600. So that is money that we owed at the end of the year. So that is going to be added to our figure. So we have 43,200 minus 2,000 plus 3,600, €44,800. So the next item then, contract cleaning, 8,300. So at the start of the year, you'll see we had contract cleaning prepaid at the start of the year, €200. That relates to this year, so therefore we will add that into this year's accounts. Cleaning is done under contract payable monthly in advance and includes a payment of €600 for January 2017. So at the end of the year, we have contract cleaning prepaid for January of 2017. That does not relate to this year's accounts, which we're doing for 2016. Therefore, we will minus that from the figure for this year. So 200 plus 8,300 minus 600 is €7,900 there. Next, we have the light and heat, 5,600. So at the start of the year, we have stock of heating oil there, €1,800. Then at the end of the year, we have stock of heating oil, €400. So if we think about it, at the start of the year, stock of heating oil, that is out in the oil tank at the fitness centre, okay, outside at the start of the year. Are they going to use that this year? Yes, they will. So we're going to plus that 1,800 and we are going to minus that 400 because we have not used that heating oil during 2016 if it is still in the tank at the end of the year. Then in note 6 we have some of the light and heat is attributable to the shop, so that was €300, so we're going to minus that as well. So our light and heat is going to look like this: 1,800 stock of heating oil at the start of the year plus our amount from our receipts and payments. Then we're going to minus the stock of heating oil at the end of the year, and then we're going to minus the heating oil that went to the shop. So that is 6,700 altogether. Next, we're going to look at the laundry. So we've already read about a fitness instructor's wages went into the laundry by mistake. So nothing about laundry at the top of the question. Then in note 5, it says the payment for laundry includes 2,700 for 3 weeks wages paid to a replacement fitness instructor. So therefore, we're going to take that out of the laundry because it belonged in wages and salaries and we've already put it up into wages and salaries up here. So altogether then your laundry is €8,900. Then we have the loan the loan interest. So we have loan interest for this year for 3 months. So earlier on we worked out that 12 months was 2,400. So 3,000 divided by 15 months multiplied by 12 was 2,400. Therefore, for this year then, 3,000 divided by 15 months multiplied by 3 months is €600. So €600 is what is going to go into the expenditure for this year. So 3 months loan interest, €600. So then we've finished the receipts and payments. We've ticked everything off there. Now we need to look and see, are there any other income and expenses then from our list of additional information here. So we've already dealt with this here in the P&L, we've dealt with this in the P&L, we've dealt with this in the P&L. Now, note 4, the closing bank figure does not take into account. Here we have bank charges. Bank charges are an expense, so we need to put them into the P&L. So bank charges, 110, are going to go in there. Then the next thing, we've dealt with everything else in the P&L. Next thing we have to do is the depreciation. So we have to do buildings and grounds, 2% of cost from date of purchase. So depreciation buildings and grounds, we have 14,250. So we have to be very careful here. We had 600,000 buildings at the start of the year. Multiply that by 2% is €12,000. And then during the year, if you see in the payment side of the receipts and payments account, you'll see that they purchased a building, okay, on the 1st of the 4th. So they only had it for 9 out of 12 months. So that is, when we work that out, the depreciation is €2,250. We add those two together and we get €14,250. Then we work out the depreciation for equipment. So our equipment, €80,000 multiplied by 20% is €16,000. Next, we have our furniture. Now we're told that there's no depreciation in the year of sale. So we have 40,000 at the start of the year, then we minus the 20 that was sold, and there's going to be no depreciation on this at all. And then we add the 12,000 new for the whole year. Multiply that by 20% and that is €6,400. We add up all of our incomes and all of our expenses, take our expenses away from incomes, and our net profit is €117,040. Then we add our reserves from the 1st to 1st, that was from Part A, €351,400, and that gives us a profit and loss balance on the 31st of 12th 2016 of €468,440. Next, Part D, prepare a balance sheet on the 31st of the 12th 2016 for 30 marks. So this is just a list of all of our assets and all of our liabilities on the 31st of the 12th 2016. So we want to look everywhere for information here for our balance sheet. So scan through all of the questions. So hopefully you will know that we have the buildings and grounds. So you purchased a building on the 1st of the 4th there as well, and then you have the 2% depreciation. So cost of buildings are the 600,000 from the start of the year, plus the building that was bought during the year, the 150, that is 750,000 cost. Then you have the accumulated depreciation that you worked out in Part A, so the 3 years there, and you add that to the depreciation for this past year, and that is €50,250. So 750,000 minus €50,250 is €699,750. So then you work out then the equipment. So again, equipment had the 3 years accumulated depreciation on it, and this year's. So there was no change to the cost of depreciation. This 48,000 is the 3 years accumulated depreciation, and then the 16,000 is this year's depreciation. So altogether, 80,000 minus 64,000 is equal to €16,000. Then you have furniture. So furniture, a couple of things happened here. We sold furniture worth 20 and then we bought furniture worth 12. So remember, no depreciation was charged on furniture in the year of disposal. So we had 40,000 minus the 20,000 plus the 12,000 that was bought during the year, and that is equal to 32,000. And then the accumulated depreciation, we have the 3 years accumulated depreciation that we worked out in part A. Then we minus the depreciation on the sold furniture that we sold, the 12,000 there. And then we add 6,400 that we calculated for this year. So altogether, the accumulated depreciation for furniture, €18,400. So that is a net book value of €13,600. We tot them all up there. Then we put in our financial fixed assets. So we had 3% investments, €90,000. So that is €819,350. Now, current assets. Is there any investment income due? Well, we worked out, and we spoke about this earlier on, that there is no investment income due, but it should always be the first thing that we think about when we look at current assets. So we had 2,700 was the amount for the year that we should get, but we had received €3,000. But at the start of the year, there was 300 investment income due at the start of the year. So therefore, there is no investment income due at all. Here at the bottom, we see that there is balance at bank 3,300, which will be brought down on the debit side. So that is a current asset. However, in note 4, this is going to affect the bank. It says, the closing bank figure does not take into account bank charges €110 and a dishonoured cheque €950 received from a member in respect of fees. So therefore, our bank is going to be reduced by the bank charges and the dishonoured cheque from the member, so €950. So 2240 is our bank. Then we have closing stock of shop and heating oil, so the 1800 and the 400 goes into current assets. They are things that we own at the end of the year. Then we have in note 2, we have cleaning prepaid of €600. Then in note 3, we have members' fees due at the end of the year, 2,700. Here, the second sentence here is an asset, but we also need to remember that 950 needs to be added to that because that was dishonoured cheque. Now, that is not a bad debt unless the question tells you that it's a bad debt. If you just imagine a member given a cheque and the cheque being dishonoured, what would happen would be that the bookkeeper would ring the member and say, listen, that cheque was dishonoured. Can you please arrange an alternative payment or send us another cheque whenever you have funds in your account? So you need to be careful there. So with the members' fees due, you have 2,700 plus the 950 dishonoured cheque, so in total 3,650, and the members' fees prepaid, or the members' fees, include 4,200 for 2017, so that is members' fees prepaid, which is a liability because the club owes them that membership. So then we have the number 5, we owe 2 weeks' wages to the instructor. So wages due, €1,800 there in the liabilities. Then we have in note 7, creditors for supplies at 31st of the 12th 2016 were 3,600. So we owe the creditors for supplies 3,600 there. Next, we have the authorised capital 500,000 and the issued capital 350,000. We add the profit and loss from part C, we tot everything up, and then our total net assets and our capital employed are €818,440 altogether. So that is the balance sheet of Fitpro Fitness Centre Limited on the 31st of the 12th 2016. So part E then says Fitpro Fitness Centre Limited have decided to purchase and install new gym equipment. They have received a quote of €225,000. Can Fitpro Fitness Centre Limited afford this investment, and explain your answer? And sorry, that is 10 marks there. So we need to look at a few things here. So in every service firm question, we should be asking ourselves, would capital expenditure such as new equipment attract new customers and therefore increase profits in bar, restaurant, shop, etc.? Is there a bar, restaurant, shop profit? Did they make a profit or loss this year? What is the service firm's bank balance? What's the service firm's cash balance? Do they have any investments? Do they have a loan? Have they paid off a loan recently? Do they have additional shares that they can sell? Have they purchased fixed assets during the year? Are they of a non-recurring nature, which means that you're not going to be buying these things every year? So they're big, chunky once-off expenditures. So you'll see I've highlighted the figures that have been taken from the question here. So Fitpro Limited can afford the new gym equipment. So you're saying, can they afford it? Yes or no? And in this case, we're saying they can. So it can finance the cost of 225,000 by selling the investments and receive 90,000 cash, and issuing extraordinary shares and collect 135,000 in cash, or 150,000 from shares and 75,000 from the investments. It has just repaid a loan, including interest, of €63,000 and spent a net 152,000 on fixed assets, both of which are of a non-recurring nature. That is your buildings and your furniture. I would put in the amount that you have spent on both of those as well. I would list out those figures too. The company made a profit this year of €117,040 and has cash in the bank of €2,240. The company has no need to borrow to fund the project, which will eliminate interest payments and result in higher future profits.